NIO is scheduled to report quarterly financial results on Tuesday, September 2nd, 2025, and investors are asking me if they should buy NIO stock before the company announces these results. I'll answer that question in this video. I'll also share with you the details on what investors should look out for from NIO in terms of their vehicle deliveries, gross profit margins, total revenues, and new products coming into launch. I'll preview the company's recently completed quarter, its updated monthly sales figures, and I'll share with you my proprietary discounted cash flow valuation model that calculates a fair value for NIO stock and what it can mean for NIO stock investors heading into earnings. So without further ado, let's dive into the results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so NIO has already updated investors in terms of their monthly sales for April, May, June, and July. When the company reports its quarterly financial results in September, investors will already have an idea of how many cars the company delivered in the recently completed quarter. In fact, in July, the company updated on August 1st its July delivery update. It delivered over 21,000 vehicles, and for the first several months of the year, the company has delivered over 135,000 vehicles, increasing 25% year over year. The company has launched new models, new brands, including Envo and Firefly. And in fact, in the most recently completed month, 2,366 vehicles were sold from the company's Firefly brand. Additionally, the company sold vehicles from the Envo brand. These are lower priced models compared to the NIO models. The smart large flagship SUV, the Envo L90, was officially launched on July 31st, 2025, with user deliveries starting shortly after. And the initial results from this product launch have been very positive. That's been creating a lot of enthusiasm for NIO stock investors. The company's had a habit of launching several new models and several new updates. It's been one of the more innovative electric vehicle brands, and it's been gaining significant market share, to be sure. One of the downsides of that strategy of launching several new and exciting models is the cost, and NIO has been losing significant sums of money on the bottom line. That being said, the company's margins have been improving. In the most recently completed quarter, the company's vehicle margin was 10.2%, compared with 9.2% in the same quarter last year. So an improvement of 100 basis points on its vehicle margins. And the better margins it delivers on each vehicle sold, the more money is left over for operating expenses. Things like sales and marketing and general and administrative expenses can be covered more easily if the company is selling more vehicles with higher margins per vehicle. So I highlighted one of the newer vehicles from the Envo brand that was launched in April of 2025. The company officially launched and started deliveries of the Firefly brand. And in May of 2025, the company officially launched and started deliveries of its 4 products featuring comprehensive upgrades, including the new ES6, the all-around SUV, the new EC6, the smart electric coupe SUV, and the new ET5, their smart electric midsize sedan, and the new ET5T, their smart electric tourer. And overall, SUVs have much higher demand than sedans and other types of models. SUVs worldwide are selling much better than sedans. In fact, Tesla's Model Y is the best-selling SUV, the best-selling car in the world, partly because it's an SUV. So SUVs, consumers prefer these over regular vehicles, and that's why NIO's latest launch from the Envo brand has generated so much excitement from consumers around the world. So I've created a proprietary discounted cash flow model for NIO, and I forecasted the present value of all of the free cash flow this business will generate between today and the very long run to be just over $11 billion, One of the bigger downsides of the present value calculation for NIO is the relatively high beta at 1.42. It's been a more risky investment. It's been a more volatile investment with the price moving up and down significantly in recent years. In fact, over the previous 5 years, the share price is down significantly. Right now, the stock is trading at $6.75 per share. That's near its 52-week high of $7.71 per share. The stock is up almost 11% today. As I mentioned, investors are becoming more and more enthusiastic about NIO. It's been one of the retail favorites. It's been among those stocks that are popular with retail stock investors. And the thing that's in common, if you're trying to look for a stock that might be a retail favorite that might get popular, one of the things that they've had in common that I've noticed is a low market price in terms of the dollar per share. NIO at $6.75. Many of these stocks that became retail favorites were trading at less than $20 a share, and that makes it accessible to a broader base of investors, which makes it potential to become one of those popular stocks that gets purchased by many, many investors. Right now, I calculated the intrinsic value per share at $5.94. So the market price at $6.75. If I apply a margin of safety, looks like it's fairly valued at the current market price. So I've been following NIO stock for several years, and I have never had a buy rating on this investment. I have not been a fan of the electric vehicle industry. It's been one of my least favorite industries over the previous 5 years. And if you had followed my distaste for electric vehicle stocks, you will have saved a lot of money over the previous 5 years because many of these investments are down hugely in that time. Many of these companies have gone bankrupt in that time. It's a highly competitive industry, large capital investments. It's oversupplied, right? The capacity for vehicle production far exceeds the demand for vehicle purchases by the millions, perhaps even over 10 million, closer to 20 to 30 million oversupply in this market of capacity. And so that's created this unattractive situation for investors. It's partly why NIO stock has underperformed so significantly in recent years. So I've had this stock rated as a hold all year long. I last updated it on July 14th, 2025. And to answer the question, should you buy this stock before earnings? I say no. I don't think it's time for NIO stock to be added to investor portfolios just yet. Sure, sales are increasing, momentum is increasing, but you've yet to see the improvements on the bottom line. And I want to see more progress in that regard. And I want to see the competitive positioning of the industry to improve and not be so intense with the price cutting and the increase in new models and new supply. So for now, I'm keeping NIO stock rated as a hold.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.